We have with us Harshvardhan Dole as well, joining in from IIFL Securities. Harshvardhan, great to have you on ET now. Firstly, your takeaways. We just had the NHPC management, and I think you did catch a part of that conversation.
So as a stock, we like NHPC. It's a great, yield co. And the way we see things, hydro will only gain prominence for the fact that if the share of renewable were to increase here on, you would require, peaking support from hydro or pump storage hydro. And to that extent, the government policies will be much more accommodative, much more conducive than what they were, relative to, prior, periods. We have also seen aggression from NHPC management to fast track the projects which were stalled and take them to logical conclusion. We have also seen them quite active in terms of acquiring projects which ensure that there is a growth beyond the projects which are basically under pipeline. So in all, looks to be a fairly good story, and most importantly, it's a clean and green story. So a lot of investors seem to be having an appetite for the same.
Okay, so NHPC is a great, clean and neat story with a lot of upside potential, aggression being shown by the management as well. But for the overall sector itself, Harsh, we are seeing a bit of a transition, right? Street seems to be a lot more excited about green hydrogen, the pump storage, etc. A lot of chatter around JSW Energy as well. What are you hearing in terms of the investor interest right now? What are the decision-making criteria that they are looking at?
See, frankly, the way Indian power sector is playing out, the fundamentals are clearly changing, and these are changing in the benefit of the generators. Say 5 years ago, relative to the demand, supply was just bunching up, and there was huge underutilized capacity. Over the last few years, the demand has grown up, and the supply has not caught up. And now you're at a situation that if the supply doesn't improve, 2 to 3 years out, you are basically facing a severe energy deficit. So investors love this kind of scenario whereby an advantage is in the favor of the industry, and they are trying to explore what are the possible ways in which one can play this theme. What we are recommending to investors is, given the fact that the merchant story is no longer available to play in India, let's take a slightly holistic view and stick to the companies who have got solid balance sheets and an impeccable revenue model. And these are surely the PSUs, which is NTPC, Power Grid, to an extent even NHPC, which will give you capacity-based stable earnings growth, a good dividend yield, and their valuations are still not, as expensive as some of these mid and small cap companies are trading at. And to that extent, we continue to like these companies over some of the private sector names where the revenue model seems to be slightly risky.
Harshvardhan, traditionally the concern with the power sector always used to be that it's a PSU, the entire sector that is. So government intervention, change in policies, etc., run as a risk. And the other one, of course, was, the financial health of the sector per se as well. Now, to add to that, there are this competition from the private players too. You think those overhangs are now behind us?
See, at least, there is, apart from maybe Tata Power, Torrent, and CESC, and of course JSW Energy, which is making a huge investment on, the renewable side. On the traditional, thermal as well as regulated revenue model, there are no great available. And frankly, the investor seems to have, lost appetite for taking a riskier bet in the sector. And to that extent, this is sort of, there is no alternative. And by default, investors are opting for relatively low risky, but solid, growth potential revenue models, which are Power Grid and NTPC.
So does that remain your top pick as well, NTPC, Power Grid, and what's the pecking order in rest of the private sector names?
So NTPC is our top sector pick. We also like Power Grid, but one has to be mindful of the valuations in the near term. The way stock has outperformed the broader markets in last 1 month, I think we'll be more comfortable buying it slightly cheaper. But if one is not too mindful on the valuation, still a good stock to own. Torrent Power is one name that we're extremely upbeat on the private sector segment. Simple reason, this company has grown the financials without diluting equity, and they have managed to balance growth as well as return ratios to the overall shareholders. The market cap may not be as big as NTPC, or the liquidity may not be as enticing as that of Power Grid. But if somebody is looking for a mid-cap exposure, I think that's a name that stands out certainly well amongst all the private sector names that we cover.
Have you managed to look at this entire smart metering play? We were discussing that with the management at Genus Power as well. HPL Electric has run up. I know these are very small stocks to come under your coverage, but in terms of the investor interest, is it peaking?
There is. See, again, the whole power story can be played through multiple ways. Either you own the traditional utilities, or you end up owning these supplier or the vendor base who actually benefit disproportionately out of the capex that the utilities are doing. So smart metering is one such way to play the whole power sector theme. Honestly, I haven't looked at those couple of names which are listed, but in general the space is quite promising.
And Harsh, it'll be remiss of me if I didn't ask you about Reliance, because you track that one also very closely. We saw quite a bit of up move yesterday. Today that stock is trending higher. Is that something in results that people are expecting? Is that the entire value unlocking which is at play? Your call on Reliance?
So we are forecasting YOY flattish or slightly declining first quarter. That's mainly because last year O2C base was significantly stronger. But that's been offset by strength in the B2C businesses. And to that extent, the broader number should be, okay, if not exciting. But the second half should be quite more promising because the gas production improves, and hopefully the core B2, the O2C business should be much stronger than what we are seeing in the first half. On broader basis, I think the call is what possible announcement may come through in the AGM, which probably is say a month out. So all eyes on the AGM, and that will be the key trigger for the stock's outperformance from here on.
So net, what is the target that you have in mind for Reliance, and what's your view of the entire unlocking that has played out over the last couple of days with the demerger of the financial services record date, Reliance Retail, the valuation pegged?
See, we value Reliance Retail closer to about $105 to $110 billion on an aggregate basis. So the valuation that seems to be, in media is more or less in sync, or rather our valuation is more or less in sync with what the media seems to be reporting. And there is very less delta to be, played through that particular initiative or that basically news flow. But the good point is the first demerger is basically underway. And hopefully this should kickstart, the spate of demergers that investors are looking forward. In my opinion, next 12 to 18 months are going to be quite interesting because each of these initiatives, be it Geo, be it even retail, are approaching that critical mass, whereby there is a good possibility that they may be listed separately in probably next 12 to 18 months time. So we have a positive bias on the stock. And while the stock is now trading closer to our base case, sum of the parts, which is close to 2,800 rupees a share, typically, we'll look forward to revise this subsequent to the first quarter numbers.
Interesting, Harsh. Great to have you on the show today. Thanks as always for taking the time out and joining in.